Good morning. I'm John Ellsworth with Success Strategies. I'm the founder of Success Strategies Incorporated and the creator of the Success Strategies Advantage. And I want to tell you about a book that I was reading recently entitled The 5-Day Weekend. Sounds kind of enticing, doesn't it? Well, it's written by two gentlemen named Nick Halick and Garrett Gunderson, and essentially it was written by them in an attempt to get people off their financial dependence on borrowing and not doing their own thing. But that's not the point of this discussion. But it got me to thinking. They talked about the two primary drugs that working people doing 40-hour work weeks depend on. It's caffeine from Monday through Friday, and then from Friday through Monday they talked about the dependence on alcohol to get back to where you could handle the Monday through Friday caffeine again. But it's funny, but it's also sort of in tune with life for a lot of people. Not making light of that, but it got me thinking about another drug, if you will, that we depend on in our society. And 3 years ago, I predicted that within the next 5 years, so within 2 years from today, that most banks would stop doing short-term lending on herd loans and feed lines. Now that's a pretty bold statement, but it's just based on an observation I was making in the lending and agricultural industry at that time, specifically the dairy industry. You know what, folks? It's Ground Hog Day. Unfortunately, it came sooner than I thought it would, or certainly sooner than I was hoping it would, and it's time for us to identify some new financing sources. One of the suggestions I would make for you is that we need to do more long-term financing based on real estate, if that's at all possible for your operation, and to decrease our dependence on herd and feed lines. Now, some of the pluses, one of the biggest pluses, of course, is that you'll get an immediate boost to your cash flow monthly because you're actually repaying the loan on a 25-year payment basis with a long-term real estate loan. So the amortization period is much longer than a 7-year herd loan or a 12-month feed line. The biggest thing is that it'll be much easier for you to stay within your lending guidelines. Now, one of the arguments against this process that I've heard from clients and non-clients of mine, they say, gee whiz, I'll never get out of debt doing that if I'm going to repay it over 25 years. Well, my response to that is tell that to the gentleman or the lady who has a high or excessively high loan to value on their herd and feed lines because of the downturn in the industry. That is a worse situation than taking 25 years to repay a real estate loan, in my opinion. So there's a couple points in response to that as well. Number one, you can prepay these real estate loans, especially if you have what I call a declining revolving term loan. Now, if you'd like more insight, more detail on what a declining revolving term real estate loan is, I'd be happy to share that with you and email me. I'm happy to respond to you. I will tell you exactly what it is. Number two, you can borrow back against these, especially if it's one of these declining revolving term loans. But even if it isn't, you can always refinance the real estate and borrow again against the real estate after you've paid it down part way, particularly if you're doing positive improvements to your operation, or if you've already done some of those out of cash, like adding another freestall barn or whatever, you can borrow against the increased value of that and probably not even have to redo the whole loan. My point of this whole discussion today is that it's time to wean ourselves off dependence on short-term loans. But people say, but John, I need them. I got to have these to cash flow. I would suggest there's three things we need to think about. Number one, do you know what your cost per hundredweight actually is to produce 100 pounds of milk in your operation? Do you know that? Number two, if you do know that, and I'll go back to number one for just a second, if you don't know that, you're really flying blind, and how would you even know how to set your fixed prices on milk if you don't know what your cost per hundredweight are that you need to cover? Point number two, once you know that cost of production per hundredweight, ask yourself, are these costs reasonable? Are there areas that I can improve in? Are there areas that other producers are whipping me big time that are doing so much better than I am on labor, feed costs, whatever item you're out of alignment with the industry on? And number three, I would suggest that it might be high time to identify some new revenue sources. There are operations around the U.S. that are cash flowing today, and part of the reason they are is because they've identified some new revenue sources. I don't know what yours are, but if you sit and think for a while, I'm sure you'll identify them. I recommended and implemented with some clients selling excess heifers. They had way more heifers than they needed. Not just to maintain the herd, but they couldn't grow, and they had probably 20% additional heifers. And I could suggest sell those excess heifers, and the response I typically get, as I did with them, is they won't bring anything. Well, that's totally untrue. They will bring something. They won't bring what they did at the peak of the market in 2014, 2016 perhaps, but they will bring in some cash, some much needed cash in most cases. And I think thinking one step beyond that, the thing we need to think about, folks, is when you're feeding 100, 150 less heifers, even 20 less heifers, you have some ongoing savings in your feed costs because we're not feeding them anymore. So you not only get the cash infusion from the sale, albeit it may not be at the highest price ever in the history of the industry, but you won't have to feed those animals anymore either. And that, in one client's case, saved them $6,000 to $7,000 per month. That's huge today in the dairy industry. I would suggest that this is something we need to think about. Know your cost per hundredweight. Know how they compare with the rest of the industry. And there's lots of information, including information from us at Success Strategies, that you can obtain to know where you should be. And then start identifying those new revenue sources. And I would ask you one question. Do you like this type of thinking? Because if you do, and this topic is something that's of interest to you, these are the types of things we're going to cover at our mastermind groups for dairymen coming up starting in April. And I would urge you to join us for the Success Strategies Mastermind Dairy Group. We start in April, as I said. Applications are being accepted now, and you need to meet that deadline, which is coming up pretty soon. Again, I would welcome you to join us. I'm John Ellsworth with Success Strategies. I'm the founder of Success Strategies Incorporated and the creator of the Success Strategies Advantage. I wish you the very best of success, and I thank you for joining us today. Thank you very much.